Did you know that the best long-term growth stocks can deliver returns of more than 100% per year, while the average stock market return is only about 10%? That's right, investing in long-term growth stocks can make a huge difference in your wealth over time. But how do you find these stocks? And what are the criteria for selecting them? Well, in this video, I will show you the top 10 stocks to buy and hold for long-term growth based on the different researches. These are the stocks that have the potential to grow their earnings and sales at rates significantly above the average for the stock market as a whole. They also have strong competitive advantages, consistent earnings growth, and reasonable valuations. So if you want to learn how to invest in the best long-term growth stocks, stay tuned and watch this video till the end. Number 10. Valero Energy. The number 10 stock on the list is Valero Energy, which is the largest independent refiner and marketer of petroleum products in the U.S. Valero operates 15 refineries and sells its products through more than 7,000 branded outlets. Valero is a good long-term growth stock because it offers an attractive dividend yield of 4.5%, which is well supported by its robust cash flow generation. Valero also has the potential to benefit from the energy transition, as it invests in renewable fuels such as ethanol, biodiesel, and renewable diesel. Valero has a forward price-to-earnings ratio of 9.6, which is below its historical average and the industry median. Number 9. Tractor Supply. The next stock on the list is Tractor Supply, which is the largest operator of retail stores that cater to rural lifestyle customers. Tractor Supply sells a variety of products such as farm and ranch supplies, animal feed, hardware, tools, clothing, and home decor. Tractor Supply is a good long-term growth stock because it has shown resilient performance during the pandemic, as its sales grew by 27% and its earnings per share increased by 50% in 2023. Tractor Supply also has expansion opportunities as it plans to open more stores, grow its e-commerce business, and acquire other niche retailers. Tractor Supply has a dividend payout ratio of 28%, which leaves room for future dividend growth. Number 8. Sysco Corp. Sysco Corp is the largest distributor of food and related products to restaurants, hotels, and other food service customers. Sysco serves more than 600,000 customers in 90 countries and offers over 400,000 products. Sysco is a good long-term growth stock because it has recovery potential after the pandemic, as the food service industry rebounds from the lockdowns and social distancing measures. Sysco also has growth initiatives, such as expanding its international presence, enhancing its digital capabilities, and improving its operational efficiency. Sysco has a dividend yield of 2.4%, which is above the market average, and a dividend growth streak of 51 years, which makes it a dividend aristocrat. Number 7. Stellantis NV. The next stock on the list is Stellantis NV, which is the fourth largest automaker in the world by volume. Stellantis was formed by the merger of Fiat Chrysler Automobiles and Puget SA in 2023, and it produces and sells automobiles and related services under various brands, such as Jeep, Dodge, Ram, Fiat, Peugeot, and Citroën. Stellantis is a good long-term growth stock because it has an attractive valuation, with a forward price-to-earnings ratio of 6.4, which is well below its peers and the industry average. Stellantis also has an electrification strategy, as it plans to launch 30 new electric and hybrid models by 2025 and aims to achieve carbon neutrality by 2030. Stellantis has a dividend policy of distributing 40% of its net income to shareholders, which implies a high dividend yield. Number 6. Lockheed Martin. Lockheed Martin is the largest defense contractor in the world. Lockheed Martin provides aerospace and defense products and services to government and commercial customers, such as fighter jets, missiles, satellites, and space exploration. Lockheed Martin is a good long-term growth stock because it has stable demand, as it has a backlog of more than $140 billion, which represents about 3 years of revenue. Lockheed Martin also has growth opportunities, such as expanding its international sales, developing hypersonic weapons, and exploring new domains such as artificial intelligence and quantum computing. Lockheed Martin has a dividend yield of 3%, which is above the market average, and a dividend growth streak of 19 years, which makes it a dividend contender. Number 5. Home Depot. The next stock on the list is Home Depot, which is the largest home improvement retailer in the world. Home Depot operates more than 2,200 stores that sell building materials, tools, and other products to do-it-yourself and professional customers. Home Depot is a good long-term growth stock because it has shown strong performance during the pandemic, as its sales grew by 20% and its earnings per share increased by 16% in 2023. Home Depot also has e-commerce initiatives, such as enhancing its online platform, offering curbside pickup and delivery options, and integrating its physical and digital channels. Home Depot has a dividend payout ratio of 55%, which leaves room for future dividend growth. Number 4. Hartford Financial Services Group. Hartford Financial Services Group is a diversified financial services company that provides property and casualty insurance, group benefits, and mutual funds to individuals and businesses. Hartford serves more than 20 million customers and has over $500 billion in assets under management. Hartford is a good long-term growth stock because it has an attractive valuation, with a forward price-to-earnings ratio of 9.9, which is below its historical average and the industry median. Hartford also has growth prospects, such as expanding its market share, improving its underwriting profitability, and diversifying its revenue streams. Hartford has a dividend yield of 2.2%, which is above the market average, and a dividend increase of 8% in 2023, which marks the 12th consecutive year of dividend growth. Number 3. CRH plc. CRH plc is the largest building materials company in the world. CRH produces and distributes building materials such as cement, aggregates, asphalt, and concrete to customers in the construction industry. CRH operates in 30 countries and has more than 80,000 employees. CRH is a good long-term growth stock because it has exposure to the infrastructure spending, as it benefits from the increased demand for its products in both developed and emerging markets. CRH also has margin improvement as it focuses on operational excellence, cost reduction, and portfolio optimization. CRH has a dividend yield of 2.6%, which is above the market average, and a dividend growth streak of 37 years, which makes it a dividend champion. Number 2. Cheniere Energy Partners. The next stock on the list is Cheniere Energy Partners, which is a master limited partnership that owns and operates liquefied natural gas, LNG terminals and pipelines in the U.S. Cheniere is the largest exporter of LNG in the U.S. and has long-term contracts with customers in Asia and Europe. Cheniere is a good long-term growth stock because it has growing demand for LNG, as natural gas is a cleaner and cheaper alternative to coal and oil for power generation. Cheniere also has expansion projects, such as adding more production capacity, extending its pipeline network, and developing new markets. Cheniere has a high distribution yield of 7.2%, which is well covered by its cash flow, and a distribution growth streak of 8 years, which makes it a distribution achiever. Number 1. Archer Daniels Midland. The top stock on the list is Archer Daniels Midland, which is one of the largest processors and transporters of agricultural commodities in the world. ADM converts corn, soybeans, wheat, and oilseeds into products for food, animal feed, industrial, and energy uses. ADM operates in more than 200 countries and has more than 40,000 employees. ADM is a good long-term growth stock because it has exposure to the global population growth, as it supplies the essential ingredients for feeding the world. ADM also has growth drivers such as increasing its value-added products, expanding its geographic reach, and investing in sustainable solutions. ADM has a dividend yield of 2.5%, which is above the market average, and a dividend growth streak of 46 years, which makes it a dividend aristocrat. So these are the top 10 stocks to buy and hold for long-term growth based on my research and analysis. I hope you found this video helpful and informative. If you did, Please give it a thumbs up and subscribe to my channel for more videos like this. Also, let me know in the comments what are your favorite long-term growth stocks and why. Thank you for watching, and I'll see you in the next video.